Okay, another edition of our coach's mailbag. Matt Tan here. Matthew, great to see you. Had a question in our clubhouse I thought would be interesting to feature. He asked a question: does anyone know the difference between trading Euro US dollar and E7, the E-mini Euro FX futures? Is there an advantage of one over the other? And let me kind of pin that down a little bit. Number one, to be able to access and trade both in the same account, you probably need to have a specific type of broker that will do that for you, like a TD Ameritrade, Interactive Brokers, those multi-product brokers that can feature both. Many FX brokers, Matthew, they're only going to trade cross pairs, right? So we're talking about something else like that. The euro dollar here's the daily chart, for example. And would have been an entry point maybe this morning, but let me just kind of create an order here. Let's say that you were going to sell the euro dollar pair, okay? 100,000 currency shares, those are actual currencies, is what they call a standard lot in currency, selling at 1.1492. The 2 is a pip, and every pip will make you a certain amount of money, $10 per pip. And the cost to do that is about $92.90 or $22.99, I should say. So $2,000 to put that position on. Now, the E7 Forex futures, you'll notice it's the same chart because it's tracking the same product, okay? And the Euro futures, if we sell this one as a single, the buying power effect, now that's 10. Let me edit that to do 1. You can do one contract for about $1,200, it looks like. So the BP effect on margin on that is $1,200, and then you've got your reward to risk expectations. Now, okay, so if I'm looking at the euro dollar and I want to get an idea of what a trading plan would be, I need to have a stop loss point, and looks like I got a line I can draw on there right there. Say I'm going to put a stop at 116 and change, okay, and target down just on support to keep it simple. Now, the reward to risk doesn't look perfect there, but that's not what I'm trying to do answering the question. Just kind of look at the details of the difference here. If we paint this out, and let's compare the actual numbers on both. So EUR, USD, minus 100,000, or what they call a standard lot in Forex trading, entry, stop, target, okay? So, and I'm going to move that up. We'll bring it back here in a minute, but I need both screens while I do this. Let's say I want to put my stop loss 10% of the ATR above the high. The ATR looks to be about 77 pips. So the H here, the high of that would be 116.20. So I'm going to put a stop loss in at 1.1627. Okay, so that is actually this exact location right there. So that's our stop loss. Now, the target, just for simplicity, I think we're going to call it 1.1340. And the entries on the current pip, let's say we're just building it to look at the comparison, 1.1497. And if I look at the Analyze tab, risk profile, let's simulate as if we're going to sell short on 100,000. Our entry point was 1.1497. Our risk profile here, you'll notice, is just a 45-degree angled line. The more that it goes down, the more money you make. Now, using the price slices here, I can put my stop loss in at 1.1627. So if you're wrong on the euro dollar pair, you lose $1,300. And if you hit your target at 1.1340, little misprint there, 1.1340. If you're right on the euro dollar pair and it goes down, you make 1,570. So the reward to risk in this one's pretty even because we did miss our trigger entry point a little bit. Total cost on that to do the trade, $22.99. Okay, now if we compare that with the E7 futures contract, you'll notice similar chart, a little different pricing. The entry would be at 1.1553 because it's a futures contract. They're pricing out the future. Entry 1.15 553. So the numbers do change just a little bit. Our stop loss mechanic would be the same, 10% of the ATR above the high. The ATR is 77 pips a day. The high point on that candle yesterday was 1.1678. So 1.1685 would be our stop loss. Gives you about 132 point pip risk. And then your target, let's say we're targeting very similar. We're going to target the low down here, about where the bodies of those candlesticks were, 1.1365. Now, the purpose here is not whether or not this is a good trade or not, by the way. Not the important thing. I just want to look at some of the numbers, some of the details, kind of give you an answer to your question. Let's see here. Let me simulate that. And we're going to use a 61-day active contract. We're going to sell that. We're going to lock in our entry point at 1.1553. And instead of 10, we're going to do 1. We're going to put our target 1.1365. Put our stop loss 1.1685. Now we're using this tool, this is a risk profile, to estimate our potential reward and risk up on the trade. Now if it goes up to 1.1685 and hits your stop loss, you lose $800. If it goes down and hits your profit, you make $1175. Now, one advantage here is that relationship might just be a little bit better. In fact, /E7 -1 futures contract. So looking at these two, and there's a couple of different numbers that we need to continue to get here. The charts are similar. You'll trade them the same way. The cost is less, $1,265. Now you can trade a lower forex size, by the way. I'll show you that here in just a minute. And that might be one of the advantages. Okay. Let's confirm and send that. And let's look here. $1,265 for the cost on that. All right, and if we're looking at reward and risk, your stop loss has a risk of -825. Your target has a reward of plus 1175. On the euro dollar pair, your stop loss is 1300, negative 1300. Your target is positive 1570. So pretty close on the relationship, but a little bit better on the futures contract. That might just be a function of the actual futures pricing right now. I wouldn't read too much into that. If I'm looking at it though, bang for my buck, for $2,300 I can make $1,500 if I'm right, and for $1,200 I make $1,1200 if I'm right. This might be a little bit more efficient in terms of capital. If you're looking at that relationship, I kind of like the futures contract numbers here just a little bit better. Other factors that would help me make my decision. The pip spread on the euro dollar pair is literally 1.2 pips. It is the tightest forex spread in the market. Now, the volume, literally we traded 222 million today. It's the most liquid instrument, maybe traded all of trading in any different product. So you have massive liquidity there. On the E7 contract, the volume 4,500 today. So you do have enough volume to be liquid. The pip spread 1.554, 1.1555, so about 1 pip as well. They're both liquid in that regard. This is enough volume to trade. The euro dollar does have a little bit better liquidity. The only thing I don't know, Matthew, is how liquid the euro dollar forex futures contract is actually going to be traded 24 hours a day. I'm sure that it is because forex markets are 24 hours a day. I don't trade that product that much. If I was going to trade the euro dollar, I would probably choose the Forex pair because I understand that product very well. I've traded it for a very long time. These E-minis are very popular in the futures market. There's also options, and there's also, not on this one, but there's options on the ETF versions of these things. And there's a lot of different ways you can trade the euro if you want to sell it short. And as a matter of fact, if you just put in the word euro here, and let me look up euro ETF. Wonder if we got one in there. I think it's FXE. See, what you can also do is you can just play FXE, which is an ETF that tracks the same thing. See, you have all different markets representing this product. You have the Euro USD cross pair, same chart. The E7 E-mini futures contract, same chart, a little bit different numbers. And then FXE, which is very similar chart, but it's an ETF version of the same product. Euro dollar cross pair is one of the biggest in the world, one of the most important to keep track of, whether you trade it or not. I think the details come down to a couple of simple things. Number one, which market do you trade the most? What are you most comfortable with? What are you most comfortable executing on? Forex cross pairs are the most popular. They're the most liquid, but the E7 is popular and liquid. Some other factors that could come into play that I'm not potentially thinking about right now would be if there were any differences in tax obligations for the futures relative to Forex, or where you live in. I know that you live in the US because I know you, Matt, but if you live internationally, it might be that you have access to the FX but not the futures contract. So some of those things might come into your decision making. When it comes down to the actual trade, they're pretty similar. They all look pretty much the same. I would probably stick with the euro dollar cross pair, but choose what you may. All right, that's been another edition of our Coach's Mailbag. Thanks for putting a question in our clubhouse, and we will see you on the other side.